Good morning, this is Rich Nelson covering the Ordinary Morning Comments for Thursday. This is February 10th of 2011. As far as outside markets, we have a little pressure here today. We will note the U.S. dollar up 63 currently, crude oil down about 47 cents. So that will add a little pressure here to grains today. Also, we've got to speak of a couple things we've got to note here. PepsiCo's CFO told CNBC that they are seeing commodity costs rising about 8 to 9.5% in 2011. That will certainly help to add to the general tone of rising world prices, rising world commodity costs, those type of issues here. So I got to keep in mind here, though today's early morning calls are actually mixed for most grains. Corn is mixed, soybeans are mixed, wheat is seen down about 4 to 7 cents. There's certainly the key point of rising commodity costs, or those type of rising commodity issues in world food prices are still providing a long-term underlying support in this market here. As far as grains, like I mentioned, look kind of a mixed trade today as far as corn and soybeans. Kind of more of a day of rest after yesterday's large gains here. Export sales this morning, looking across the board, 1.2 million tons for corn. That is better than estimates. We'll provide a little support here for corn. All other numbers were mostly neutral here today. So soybeans and wheat were neutral here. As far as corn goes, not a lot of news to speak of as far as brand new news. Yesterday's report certainly adding a tone of underlying support. We're breaking that $7 mark. A lot of people suggest we will try and get our first close above $7 probably in the next couple days here. Also to speak, we have raised our own price projections. If you are a subscriber or a client, please feel free to give us a call here at Allendale to find out what that exact new price projection is. We'd be happy to discuss it with you and also discuss what it means to your operation. If you are not a client yet, give us a call and get signed up. We'd be happy to help you out and help out your trading or hedging opportunities. As far as soybeans, like I mentioned, as far as export goes, kind of neutral here today. Not a big news day. Looks like for soybeans, which was a neutral report yesterday for soybeans, we should not see much movement here as far as prices today. Key interest on the wheat side, we're all watching these cold temps here. Sub-zero temps in the plains. We're seeing eastern Colorado, all of Kansas. In fact, that actually stretched down to northern Texas. In the past few days, this cold snap has only been limited to eastern Colorado and western Kansas. So while the cold snap has expanded, and we do have to recognize this is a sharp problem here for this winter kill idea, we do have to point out that trade's actually looking ahead right now, not behind itself. And with that, I mean, we're looking at these rising temperatures. Going into the end of the weekend, forecasters tell us that temps will actually be back to normal, actually a little above normal here for the weekend. So that's why wheat's actually called a little lower here today. The fact is, in the trade's mindset, cold temperatures are an old issue, and they're now looking ahead at this warmer weather coming up ahead for the weekend. Overnight news as far as exports, we did point out that China purchased about 165 tons of wheat. Of that amount, the U.S. sold them about 124,000 tons. So that was good to see us get that sale. The other thing I can point out for wheat, the fact right now Afghanistan is actually reaching out, and the agriculture minister indicated that they will buy 200,000 tons of wheat in the next couple months. This is a little unusual for Afghanistan to do. One thing we can point out for these guys, though, is they are into an early phase of a drought right now. It's interesting to see that this government is making this panic-type purchase even before the drought has really developed and made serious damage to the crop. So interesting to see that in previous years we probably wouldn't see them make this move at this early in the growing season for the wheat itself here. So that was certainly good to see the fact that Afghanistan and probably more of these countries have changed their mindset. They're now being proactive in their purchases. Over on cattle, looks like a mixed call today. Got to point out that news actually yesterday from that report was bearish on beef. The fact USDA did raise its beef production number by a large 255 million pounds for 2011. So bottom line for beef, instead of dropping 2.5% in 2011, the USDA now says beef production will only be down 1.5% for 2011. So that simply adds to the kind of general tone of concern that's been showing up in this wholesale beef market in recent days. So that's why cattle are called mixed at best, and maybe actually move a little bit weaker here as the trade develops today. Over on the hog side, up 20 to 40 cents. Hogs are actually doing great right now as far as recent news. Where cattle news in the past few days has trended bearish, hog news still looks pretty good for the most part. Cash hog runs we're seeing steady to $1 higher this morning. Looks like the Packers are still seeing sharp demand and don't have any concerns for what's left of any backed up numbers from last week's storm. On the report last night, we made a very good point, and you guys are going to need to know this as well. $7 corn futures. So very interesting move for hogs. The fact that all these guys are concerned about rising hog costs and rising feed costs here. $7 futures actually equals about $88 for a break even. So that's a very large concern. However, you look at those futures contracts laid out, in fact, April through September, it looks like all those months we're going to beat that $88 break-even cost. And with that new crop pricing on corn being lower than old crop, that puts the fourth quarter hog raising cost to about $81, $82. And that's actually right where futures are at right now. So from a hog producer's mindset, futures right now are telling them they can still make money easily through all this high grain cost. So as far as people trying to argue that corn is too high, we're turning off demand, it's not happening yet in the livestock sector, because bottom line is these guys are still making money even with $7 corn futures. So with that in mind, looks like hogs, like I said, a little higher today. As far as the overall trade, the Packers are still seeing demand for hogs, and so far they don't need to have any major liquidation yet from feed cost. So neat little point as far as that goes. But overall today, like I said, looks like a general tone of more or less a day of rest after yesterday's very, very large gains and very exciting news from USDA. As far as markets, we've got a lot of things going on in the next few days. Also, we've got our higher price projections, which we invite you to call in, find out what they are, and get active with trading or get active with hedging here to protect your operation here. A lot of great news and great things we can discuss with you. 1-800-262-7538. This is Rich Nelson. Have a good trading day and a good trading week.